Hi, this is Paul Constantino, Managing Partner of CTT Advisors, and today I'm going to show you through this short video the CTT Fixed Income Automated Trading Model and Strategy and Program. So to start out with, the program utilizes four different screen inputs. We have the master input that you're looking at right here in the order dashboard. We have the data inputs. This provides real-time market data as a feed from any source, whether it be Market Access, BondPoint, TradeWeb, MuniCenter, and in this case, Interactive Brokers, which brings us to our next screen. That is an order screen that has all the various different input capabilities and is interfaced via an API. And then finally, we have the order input screen that has various different modules that place orders either manually or, more importantly, through an automated process, which is the point of this presentation. So to start with, we look at the order screen, and the order screen provides a dashboard of what's going on in the marketplace as well as what my orders are based on the strategy that I'm using. In this particular case, I'm trading an ETF arbitrage strategy in the high-grade corporate bond markets. And so what this model does is it looks at each individual security and prices that security through the pricing valuation process of a professional trader. And that particular professional trader happens to be me. And so this uses my logic in determining whether a security is rich or cheap. There are many inputs that go into this logic that deal with macro factors and micro factors, statistics, analytics, etc. And I'll go through some of those factors here, but obviously not all. So if you look at in this particular case, we look at AT&T 4 1/8 of 26. The model provides pricing in spread to treasuries, in actual price, or in yield. So the model can be quoted in any different way. There's a signal that's generated that is the main determinant of what that price is that I will be inputting in this model. And then there's also markets. These markets, again, are feeds from what we had seen on this other screen here. In addition to that, there are analytics that go into these markets as well and go into the individual securities. So looking back at the dashboard, in this particular case, we see a bid. Well, the bid just faded on the AT&T 4 1/8 of 26. Again, this is an automated trading model. If we go to the 4 1/4 of 27, we see a bid of 96,939, an offer of 97,485. Those are my model prices. If you look at the market itself, the market is 97,109 to 97,34. The model has the ability to look at parameter inputs and change those inputs to make the spreads tighter or the spreads wider, whatever one wants to do. So if I make some changes to these inputs and make this tighter, you'll see that this will have a change to the input prices that go into the model. So if we go back to that same position and we look at the AT&T 4 1/4 of 27, we'll see that the bid came up to 97,042. The offer's at 97,407, and so that spread is a bit tighter than what it had been previously in the previous demonstration. So this information then is sourced from these various different key factors that go into the determinants of what pricing is. In addition to these key factors, there is statistical analysis where this information is garnered from a Microsoft Access database. You can use Access, SQL, Sybase, MongoDB. You can use Oracle, etc. But this database is embedded into this spreadsheet such that I have historical data, and that historical data is helping me to, as a component of the model, to generate orders and to generate this signal based on all of those various different components. Going back to the key factors allow me to quote in spreads, basis points to the current market, or it allows me to look at the spread of the current market and price accordingly to what the current market spread is. I have the ability to change bid amounts, offer amounts, minimum bid sizes, the thresholds of spreads that I'm quoting. So, for instance, if I don't want to look at markets that are so wide, they just, they likely won't trade, I don't have to do that, although I can. And then it also looks at a minimum signal size to say this is a relevant price within the system itself, and it is an actionable relative price. So you can change that into any price that is appropriate. This gives you the ability to trade on a retail basis and or trade on an institutional basis to make changes to how these factors are going out into the marketplace and what's relevant within the marketplace. In addition to that, there's the ability to quote, to make wide swaths of quotes in spreads to current markets in terms of basis points. The key worksheet also has inputs for risk, such that the market, the system can look at industry-wide risks. It can look at sector-wide risks. It can look at issuer-wide risks. It can look at individual security risks. And so there are allocations that have maximums. These allocations are then interfaced with the risk model, where the risk model states you have X amount of capital, you can trade X amount in these sectors, in these names, et cetera, with the ability to be as granular as shutting off an issuer name to shutting off an individual CUSIP. Going back to the key inputs, there are also inputs for volatility. So I look at standard deviations, and I have associations for value-based trading and mean reversion trading for standard deviations. And I also have maximums, such that if there is a breach of a particular security and it's exhibiting too much volatility, that security won't be traded. In addition to that, there are also parameters for maximum holding day periods. In this particular case, I have it set to 10. You can set it to 5, 3, whatever it is that you want to set. And the system will then react itself. All of these factors will react both on pricing and the pricing inputs that you see here that go into orders, but they will also interface with positions that you currently have and state that if there are various different positions that are breached at a certain time or certain level, actions will be generated. Those actions will then be fed back into the order parameter, and those orders will then be executed into the marketplace on an entirely automated basis. Moving on from the key screen, this is one of the most important screens that I am using for trading this model, and it is a display that allows me to see where the market's going and see where pricing is within the model and how the model is generating various different orders. I have the ability to look at the various different orders and look at absolute values where I say, okay, these are rich and these are cheap. Like in this particular occasion, in this particular instance, I am the best offer on Verizon, and I am the best bid on Synchrony. So there'll be occasions when I want to do that, occasions that I don't. Like, for instance, if you look at GE, GE has been flagged as being too volatile, kind of obvious case in this day and age. And so it is receiving a risk stoppage that has been generated by the system. So that gives you the ability to really control what it is that you're doing in any particular security at a very granular level, at an industry level, whichever level that you want to do this, and these are all factors that go into the model. I can also look at what's rich in the model and what's cheap in the model, and I think that it's important to be able to say, okay, where am I at in all of the different securities that I'm trading from the perspective of how can this model be used? And when we look at this model can generate pricing and orders based on institutional levels. It can generate orders based on retail levels. It can generate orders based on market making logic, on arbitrage logic, and it can be customized to suit any of the various different trading models that other traders would use. Again, this is the logic that I've created within the model, but this model can be changed to deploy different logic and from various different inputs, which would also be able to incorporate robust analytics, fundamental analytics that your quants or other analysts would provide to the model. So I look at another way to use this model within the asset management community as well, and that is that asset managers typically will have a strategy that they're deploying within their fund, and that fund strategy will then send orders down to the trade desk to execute on that strategy. This model can be set up not only to automate the strategy itself and to analyze the markets and adjust the factors for automation, but also from the trade itself, and that it can execute on an entirely automated basis. If you look at executing in perspective, if one made a determination that one needed to buy securities, instead of block trading on securities, why not spread out the risk by being able to buy multiple different securities until they reach the point where they're no longer cheap? Or being able, on the other hand, being able to sell multiple securities until they reach the point where they are no longer rich. In addition to that, I look at proprietary trading desks and those doing create redeem in ETF trading, whereas I can determine baskets of rich securities or baskets of cheap securities, provide the pricing to the counterparty, and then execute at an optimal level to myself and know specifically where I'm executing on each one of these individual securities. So this is where some of the value comes in to the model. So finally, we look at the automation end of this. So all of these prices that were generated here from market making or here from orders feed into this order book, which is entirely automated. This provides the ability to enter in orders manually if this is something that one wants to do, but more importantly, to be able to enter in orders on an automated basis via an order pulse. As we know in the fixed income markets, real time is not necessarily in nanoseconds or in milliseconds. Really, it's in minutes. And so this system, operated off of a single desktop, is able to send literally thousands of orders to the market every minute. And so I have this parameter set to 2 minutes for the model. Actually, for the point of this demonstration, I'll set it to 1. And you can see that in order to generate about 330 orders, it takes about 20 seconds to send those in through the process that it uses. So I'll click Start here. The process will run, and I'm sending in 327 or 8 orders that I know are priced right in the marketplace because the system prices these on an automated basis. You'll see this, these orders go into the system, and you'll see these orders then appear on the screen here on the Interactive Broker screen. The model now waits for the next pulse. The pulse will go out. It will cancel the orders on the screen, and it will send in other orders. It also has the ability to modify those orders too. So in conclusion, this model will give you the ability to fully automate your bond trading, as well as customize it for whichever way you want this to work. If you have further questions about this, if you like the model, please like this on whichever media you're looking at it. And you can contact me directly at CTT Advisors. There's me right there. That's www.cttadvisors.com. This information will be on my website as well. You can see this under my consulting services and under strategies, where you can see some of my model results and more information on my model. If you'd like to contact me directly about this, you can contact me at 704-321-4930. And thanks very much for watching this video.